All right, so let me say hello and welcome to another weekly edition of Stock Market Mutterings. Doug here with the LincolnList.com. This is for the week that begins on October 7th, and this is where I will do my best to share my thoughts and feelings about this market, share with you some of my trade ideas and setups in the hopes and attempts that makes you a little bit of money. Now, for some of you that want to take your trading to another level, I'm going to post a link. Hold on for just a second. Hello? Yeah, I know this market is schizo. What do you think I've been talking about over these last few years? It's like every week it's the same thing in these market mutterings or happy hours. It's like, obey your process, blah, 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 control your risk, blah, 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 draw lines on charts. I don't think they're listening, man. I really don't think they're listening to me. So what do you want me to tell them? You tell me. You tell me. I'm all ears. I want to hear what you got to say. Oh, you think they're going to listen to that? You think that's going to make a difference? Whatever. I'll do it. If you think that's going to make a difference, then fine. Maybe they'll listen. I'll try it. All right, later. So anyway, I'm going to post the link up here on the screen. If you guys need help with your trading, you can start trading with us right away. Visit that link. Now, all kidding aside, this market is schizo. And here's what I want to talk about. Here's what I want to talk about today. The market is a master illusionist. Its job is to just drain you dry emotionally. Make you second guess every decision, put you in extreme states of doubt every time you make a decision in the attempts to just whizzle away every little penny you've got and deteriorate you until you're just done. That's what its job is. Now, I've done a lot of educational videos about noise. And truly, this market is obsessed with noise. It's so headline sensitive. There's always some markets in turmoil. One day the market goes down 200 points after being 2 to 3% away from the all-time highest histories ever in the world. And you got people doing market turmoil specials. You got talks of recessions. So here's one thing I want to say and why I feel this is so important. Because it's so easy in this industry and business for you to get sidetracked. You come up with a thought, you come up with an idea, you come up with a process and a system that you supposedly swear by and live by. And then we allow ourselves sometimes to be talked out of that idea by something that somebody says that we don't even know, or some sort of buzz or hum on social media. So here's where I'm actually going with this. We had this ISM manufacturing number that came out and sort of pushed us towards more recession talk, caused some jitters in the market. Now, when it started, it seemed like Tuesday and Wednesday, all hell was going to break loose. The market was kind of slowly fading up to that point. And then you saw this significant drop on Tuesday and Wednesday. And we got all the way back down pretty close to this 200-day moving average here on the SPY. Actually, the Dow itself did hit that. Now at this point, this is what screws traders up, and this is what screws investors up. A lot of people that come into the market, this is exactly what screws them up, is that they're bullish when they need to be bearish, and they're bearish when they need to be bullish. Because if you just look back, and this is why I don't even want you to look back, but if you do for educational reasons, this is why I want you to do it. When the market was rolling at all-time highs, go back and do a search. When you're back in here at the beginning parts of September, or even back in July, you're going to see all these upgrades to the market, upgrades to stocks, people telling you now's the time to get long, the market has more legs, the rally could last forever. Everybody's so pro-bullish out there wanting to buy. Then you get 2 or 3 days of a sell-off or a small correction, and everybody's like, you better sell all your positions, you better start short selling. And that's the problem with a lot of investors and traders when they come down to losing money, is that they're bullish when they need to be bearish, bearish when they need to be bullish. You have to understand how this works, and unfortunately, the stock market, it's a game. That's all it is. It's just a tool that's used for trickery to screw you out of your money. Now, if you learn how to play that game, you're going to do just fine. You've got to understand that there's a certain sequence of events. When the market gets down to the lows like this, think about it. I know everybody's panicking and they're feeling doom and gloom, but when you think about it and you block out the noise, the truth behind this move is it was down there the entire month of August. The whole month of August, it sat down there 6, 7, 8 times. It tried to break down that valuable 282, 283 level. Couldn't do it. Now, why all of a sudden, out of nowhere, on a 2-day drop, is it going to actually go lower than that? It's probably not. It would take an epic disaster, and maybe not even that would cause this thing to continue its selling. So when I have this conversation, and I know people have different paths when it comes to investing and trading. Some of us do technical analysis. Some of us do fundamental analysis. Some of us flip coins and talk to our dogs about trades. But the truth is, what ultimately comes down to is we get paid on an exit when we decide we're going to exit. And I'm not pointing people, I mean, I've been so guilty of this myself so many times over my 2 decades of trading. I don't know how many stocks and trades I've let go at the wrong exit that I should have held on. I've got shook like a rook. I always say, shook like a rook. That's what it comes down to. Little news headlines shaking you out of your ideas and positions. If you want to succeed here, you can't listen to this noise. It will drive you, not only will it cost you a lot of money, it'll drive you nuts. It will drive you nuts. I mean, look what it's done to me over 2 decades. I'm kind of ranting here, aren't I? So anyway, what happens is, you come out here, you get on the 200 moving, and you get this epic bounce right back to the 50, like it's clockwork. But here's the thing. When you go back and you look at a chart, traders say, geez, the chart looks so good in hindsight, right? You always say, going back, looking at a chart in hindsight, it's easy to see it. Well, the reason that it's hard in real time is because you're not just looking at the chart, you're allowing that doubt, you're allowing that noise, you're allowing those interferences to cloud your judgment. And it doesn't take much if you start looking at things like P&L and you see yourself being down a couple of $1,000 more than you want to be, or you feel like you're being pressed around, or you're starting to see a bunch of negativity. It leads to doubt, which causes you to relinquish positions at poor prices. And then 2 days later, you're even more angry when they make these incredible bounces like this. So, when you're trying to do this for a living, you have to think of how the amateur trades, how they trade. The amateur, when I traded as an amateur, I sold at the bottoms and I bought at the tops. That was my classic go-to strategy. I could have just done everything in reverse. And as we progress, I mean, we are going to make mistakes. Nothing's perfect. There are a lot of wild moves in this market. But that's what it does. It's just this deceptive little devil that just sprinkles doubt, right there on your shoulder, like the spies right there on your shoulder, just flicking you in the face, just making you want to sell your stuff at losses. And then 2 days later, it's going to turn around and laugh at you, saying, ha, I stole more money from you, man. I got you again, man. You don't want that to happen. So I know I kind of got off on a rant, but just to kind of straighten this out, one of the big things that turned my career around was blocking out noise, believing in yourself, believing in your process. You see, the people that suffer from self-doubt, the people that suffer from being shaken out, that's lack of confidence in your process. You either don't have that process or you just don't believe in it yet. You've got to have a lot of faith and a lot of belief as a trader. That's all that we got sometimes is our faith and belief in our system. In fact, that's all we got. That and a couple of cases of whiskey. That's all you got as a trader. So remember that, guys. That's what the market's job always is to, how many times have you heard, market crash, market crash, market crash. We're going through a market crash, market crash. I mean, in 21 years, we've had like a partial market crash. Like we've had 2 corrections, but, it is what it is. Take it for what it's worth. Now, so here's where we are. Let's look at where we are because, no matter what happened this week, we got to get up Monday and do this all over again. The market bounced back to the 50. If you were following me on the Twitters, I said we might make it Friday morning. I'm like, this market looks like it might want to go up to the 50 moving average, which was this low here? Yeah, the low on the first. The low on the first right here. I thought we'd fill in this gap, but actually made it right to the 50 moving average. So now this is somewhat of a resistance. So when I said earlier, a lot of people buy at the top, sell at the bottom. Okay, the bottom is now this little pivot here close to the 200 moving average. You really don't turn the tide again to thinking bullish all-time highs, back to normal sort of action, unless you can cross 298s or get back. The market was already struggling with 3,000. So again, what we want to do here is focus on price, not noise. We want to look at price and let price tell us. The market has been allergic to 300. The SPY cannot get above that, hasn't been able to stick above that for very long, but yet you've got a floor down here in the 282s and 283s that seems to be rock solid for the short term. Now, sometime in our futures, one of those levels will break and things will become more clear, but for right now, you're in between that zone. Now, this 50 moving average may act as some sort of support or resistance, obviously, but some sort of support as we go forward. If the market's able to hold this up early, Monday, Tuesday, or stay around in that area, it might be ready to get back up to 10-1 highs, which is 298, maybe start getting around 300 there. Now, if you start to see more aggression, that pulls you a little bit lower. I wouldn't expect any significant market correction or panic, let me say sustainable panic, unless this thing actually gets down underneath the 200-day moving average. Anything in between that, it's just noise. It's just a range. That's all. It's stuck in a range. It's neither bullish nor bearish. It's just back and forth. So if you see a big washout and the news is telling you market in turmoil and panic and everybody should run for the hills, if it doesn't go under the 200-day moving average, there's no hills you need to run to. It's not ready yet. Now, as I said, one of these will go, and that's it. So I think I've done enough about that. How about we talk about some stocks? We've talked enough. Let's talk about some stocks. I've got some ideas here I wanted to share with everyone. I thought that these former, I don't know what, let's call them thin betas, our favorites that we've been trading, the WDAYs, the TTDs, the ROKUs, those types of stocks that went on the monster Momo runs this year. Now, if you remember, these stocks got corrected pretty heavily prior to the market going through a correction. Then when the market went through its correction, they even went down more. So you're looking at $70 a share here on ROKU. We talked about it over the last couple of weeks. You have a few of those. We'll look at WDAY here in just a second. But go through a list of those. Start looking at, you're getting a pretty good base down here. There was a nice little trade on Thursday when it kind of just perked above the consolidation. You don't want to buy these stocks as they're just nosediving. Like they say, don't catch the falling. You don't want to go down into extreme fast speed nosediving. Wait for them to wash out. There's plenty of room here. You don't have to be the first one into the trade. It went down $75. So you've got a pretty good base here that's holding this 101s, 102s. I think if you get above 110, if the week goes on, you get above 110, you're going to be looking at maybe a 50 moving average test of ROKU to 120s. I mean, there's some room there for a pretty nice trade. So kind of keep ROKU on there. I think I had the same thing when I said, did I say, yeah, WDAY. Another one here, not as aggressive, obviously, but it held a pretty good base right here at 166. Same thing. I think you can see this trade up to its 50 moving average, which is 182. It will need a range break of 177. And I believe Twillow falls right in line with that too. Another one here that's put in a pretty good time, I should say, of consolidation. So what you've seen here is these former Momos going through a corrective phase, which is normal. I mean, these things were up a lot, especially ROKU. It was like 300% at one time. So it was no surprise that they corrected. But the market has to let that stuff play out. You've got to let that correction work its way out. Let everybody get shaken out of this trade and let it settle down. And it looks like Twillow, WDAY, and ROKU are in this settling down period, aka consolidation. And they've been attacked a few times this week, tried to go lower, but they couldn't get lower. So I think you might see a short-term bottom. Now, I'm not saying that, in November they're not going to be lower, or December, but I think as we look for this week only, if these hold in here, you get a little boost maybe even out of the market, maybe not, because while the market was being corrected, some of these weren't really getting hit that much either. Watch them. I think all of these can go to their 50 moving averages again, at least here for the short term. So that's ROKU, Twillow, WDAY, three of them there that I like. Now we can go back and look at, how about we look at a couple of old timers. Netflix. I'm going to start out with Netflix here. This one's the same thing. This stock's just been absolutely butchered. Totally butchered. But it's got a pretty good daily chart now. You got a solid wick here. Thursday coming way off the bottoms. Really strong move and clear in range here on Friday, which was pretty nice. Now, the thing about Netflix is it has this ability to rally into earnings, and you got earnings coming up on this thing on the 17th. So pay attention to this one. It's still a little erratic with moves like this intraday, but I think the selling, at least for the short term in this name, is over. So again, investors, traders are looking at a move from 380 to 260. You've got a base, so you're looking at stocks that have a really long base. And I think this Netflix can go up a little bit higher. Same stands for NVDA. Now, NVDA didn't have that type of a pullback. This stock, if you go back further in this chart, which you can't see because my face is probably in the way, but it's already pulled back for quite some time. But you have a pretty solid base off its 50 moving average right here on the daily. And I think this one can trade back up at least to 187s, maybe 190s here. Again, while this market was going through some of its issues earlier in the week, this thing barely sold off. I mean, you could throw Apple in there too. It barely sold off. So there are a lot of longs. I'm actually seeing more long setups right now than I am seeing short setups. We'll have to let a few things play out early on Monday. But just to give you a recap, I think you have former Momo names like TTD, Twilio, WDAY, ROKU that have built pretty solid bases. They need a little bit of work to confirm, but not a whole lot, just a little bit of work. And I think if they can go back to their 50 moving average, use targets as the 50 moving average here because all of them are underneath of that. So I think just a short-term trade going over near-term resistance gets you back into that level. And Netflix and NVIDIA, I also think are bounceable candidates. Now, maybe they don't put together a week-long run, but some of these are even good intraday trades for small dips, small pullbacks into support, gap fills into support, stuff like that, where you can pick up stuff like this, where NVIDIA just drops a little bit in the morning, suckers out the noisy pre-market traders who said, oh my God, I chased this stock at a wrong price. And then they get smoked and it turns around and it bounces back up. So let's look at that. As always, guys, if you need my help, thanks. Come to visit me. Support at the link and list. You can always send me an email. And finally, please, block out that noise. Don't let this market screw you. That's what its job is. It's going to stick its claws in you like it's a cancer that fuels your soul. And then you're going to just get old and hate yourself. And you're going to be mad and curmudgeon-y all the time. You're just looking at this thing. You don't want to be that. Anyway, as always, if you need my help, you know how to reach out to me. Until next week's Market Mutterings, thanks for watching. Take care and trade well.